Today, we're diving into a really fascinating story playing out in the Indian economy. It's this tale of dizzying highs and sudden lows that seem to completely contradict each other. It's a paradox for sure, and we are going to get to the bottom of it.
I mean, look at this. One moment, you're seeing headlines celebrating an all-time high for banking stocks. The very next, you're reading about the market taking a nosedive. And here's the kicker. Both of these headlines popped up around the same time. So yeah, if you're feeling a bit of whiplash, trust me, you are not alone.
So, what is really going on here? Is the market booming or is it busting? Well, in this explainer, we're going to figure out the real story behind India's very confusing market moves. Okay, so here's how we're going to break this all down. First, we'll look at the global triggers that are causing all this turbulence. Then, we'll zoom right in on India's own economic strengths, see how investors are reacting, and finally, try to figure out what this all means for the road ahead. You know, to really understand the volatility in the Indian market, we actually have to look thousands of miles away. It turns out a lot of the recent chaos can be traced back to just one single piece of data that came out of the United States. And that piece of data was something called softer labor data. So what does that even mean? Well, in simple terms, a US jobs report came out, and it showed that way fewer jobs were created than anyone was expecting. This was a huge signal that the American economy might be cooling down, which immediately got investors thinking, maybe the US Federal Reserve will cut interest rates now to give things a boost. And this one report set off an incredible chain reaction, like dominoes falling across the globe. You had the weak jobs report in the US, which led to hopes of a rate cut. That optimism then lit a fire under tech stocks everywhere, because lower rates are usually great for tech companies. And that wave of good feeling traveled all the way to India, causing a massive surge in its IT sector. And the impact was instant. We're talking about India's top tech stocks as a group jumping nearly 3% in just one day. Think about that. All of that because of a jobs report from a completely different country. That is the global ripple effect in action. All right, so global news definitely explains those sudden rallies. But to really understand the market's underlying strength, its resilience, we have to look inside India's own economy. And what we find there is this fascinating story of push and pull, a real balancing act between serious challenges and some very real strengths. So, on one side of the scale, we've got a pretty significant headwind. Back in October, the country's trade deficit, that's basically the gap between what it buys from the world and what it sells, it's swelled to its highest level ever. And that's a genuine point of concern for economists. But then, on the other side of the scale, you have this incredibly powerful dose of optimism. The Reserve Bank of India, the country's central bank, took a look at all the data and actually upgraded its forecast for economic growth for the coming year. And here's the crucial part. When you look past that one scary deficit number and check out the broader economic dashboard, it paints a much more stable picture. The RBI is seeing stronger growth, lower inflation, a shrinking current account deficit, not to mention the positive effects of tax reforms. All of this points to a fundamentally solid foundation. So, okay, you've got these mixed signals, right? Global jitters versus these strong domestic fundamentals. How are the big money investors supposed to interpret all this? Well, like they always say, follow the money. And when we look at where that money is flowing, a pretty clear verdict starts to emerge. And the data here is crystal clear. After weeks of selling off, foreign institutional investors, the FIIs, made a dramatic comeback. They poured over 1,500 crores into the market in a single day. And they were joined by domestic institutional investors, the DIIs, who just kept on buying steadily. You put that together, and it's a huge vote of confidence. Okay, let's bring this all together. How do we solve the paradox we started with? Those wild swings on one hand versus this quiet confidence on the other. What does it all mean for the path ahead? Well, the answer to the whole puzzle is basically this. The day-to-day volatility, those jerky headlines, that's mostly just noise. It's the market reacting to global uncertainty. The real signal, the music underneath all that noise, is the quiet, growing confidence in India's own domestic economic engine. And look, this isn't just our take. Major financial experts are seeing the exact same thing. Analysis from a heavyweight like JP Morgan, for example, suggests that, yeah, the near term might be a little bumpy, but India's improving fundamentals could be setting the stage for a really significant rally down the road. So this leaves us with one final crucial question. We've seen the resilience of India's domestic economy, for sure, but we've also seen how quickly global events can shake things up. The big question then, the one that investors and economists all over the world will be watching, is this. Can that strong internal engine continue to power through the headwinds of a very volatile world?